Steve. This is the chairman and CEO over at Chevron. But just let me give you a little bit more detail about the mood here at the LNG 18 conference in Perth. It is, of course, focused on LNG, but where the oil price goes, the LNG price follows. About 6,000 delegates here, and it is the first day of the conference today. Been a big focus on what companies can do, of course, to mitigate those falling prices. Of course, price moves out of their control, but there are a number of other levers that they can pull, and particularly here in Australia, it's on the cost side. We know that Chevron has some significant assets in Australia. The Gorgon project, this is in northwest Western Australia, worth about $54 billion and just shipping its first LNG. But Chevron says the costs in Australia are about 40% higher than in the USA and Mexico. So stripping out costs, one thing that they can do to try and offset those declining prices. But as you rightly point out, we did speak exclusively to the chairman and CEO of Chevron, John Watson, and I started by asking him about what levers they could pull to offset falling prices. Take a listen.
We're going to have to pull a lot of those levers. Certainly, I think we'll continue to see technical advances. If you look at the size of the trains that are considered, we now have much larger and more efficient LNG trains and technology that we're putting in place. I think we can have agreements with organized labor so that we can have predictability in terms of what our costs are going to be. We can have work rules established that will ensure that we can get the most out of the talented workforce that we have here in Australia. So it's really putting all our minds together on what we can do to bring costs down, bring efficiencies up in this business so that we can complete. It's very clear for the last few years we've had a very hot market in Australia, and that drove costs up. It drove the Australian dollar up. So it's on my company and my competitors to deal with those issues. But the inherent question of competitiveness is something that I think what Australia can work on and what my company can work on jointly with government and organized labor.
When you look more broadly at a company-wide picture, do you think you need to be more restrained when it comes to spending on big projects? For instance, Gorgon worth some $54 billion, Wheatstone $29 billion. Do you think we might have seen the last of those big multi-billion-dollar projects? Because some of the other delegates and speakers here at LNG 18 have been saying they probably need to be a little bit more careful. Don't chase the boom in the commodity space anymore. Obviously, that prices aren't booming right now, but don't chase necessarily price and throw all your eggs in one basket, so to speak. Well,
there's a short-term issue with the surplus that's in the marketplace today. So given the reality of where prices are, companies that for big oil or gas projects are pulling back right now as they try to balance their books, so to speak, and we're no exception to that. So there is the current reality. And then the question is, what form of development will be economic going forward? In general, we're still going to have big projects and big expenditures. LNG developments are multi-billion-dollar type of developments, and I don't think that will change, but we can make them more efficient than they have been. We've seen some cost overruns here. We can manage those costs very well, but there's still going to be large capital commitments that are going to be required because it takes money to liquefy natural gas, transport it, regasify it in those developing markets. Those are going to continue to be big projects, and we'll have to make individual decisions as companies how many of these things we take on.
All right, back onto the price side of the equation. Are you concerned that with LNG prices, I guess tracking oil prices lower, that customers are going to want to renegotiate their supply contracts, and that could put pressure on earnings, not only for you, but for your peers as well going forward?
Actually, our industry has a history of honoring contracts. We have long-term contracts with Japanese and Korean customers, principally in the Gorgon and Wheatstone project, and we've had an excellent history with those customers because their economies are dependent upon these supplies, and they know that having those long-term relationships are very good. So I have every reason to believe we'll continue to have a good relationship with those customers.
That was John Watson, the CEO and Chairman at Chevron, speaking to us here at LNG 18 in Perth. Steve, we're going to be back a little bit later on in the show, and I spoke to John Watson as well and asked him what he expected out of that OPEC meeting that you were just mentioning and what it might do to oil prices. So you can hear that a little bit later on.
Oh, you're tantalising, dangling that carrot. I do want to know what John Watson thinks as well. I really want to know what he and Tillerson are thinking as we see this meeting come in. So we'll hear from that. Thanks, Matt. That was excellent work.